The coalition government shapes budget allocations by prioritizing social welfare over capital expenditure. This shift raises critical questions about future investment confidence. Current global economic indicators present a mixed landscape, with the US facing high inflation and elevated interest rates. This environment may soon compel the Federal Reserve to consider rate cuts. Amidst these challenges, renewed market confidence emerges, particularly among PSU companies, which are expected to perform robustly in the pre-budget phase. This positive sentiment is likely to stimulate increased investment activity. Investing in green manufacturing is pivotal for fostering sustainable growth while enhancing the chemical industry. The government must prioritize environmental considerations in its strategies. Furthermore, allocating funds for research and development is essential to bolster technology and innovation in manufacturing. Such investment is fundamental to enhancing overall productivity. To support the manufacturing sector effectively, a strong emphasis on skill development is crucial. Implementing a dedicated plan to improve skill levels will cultivate a more capable workforce. However, political motivations surrounding welfare schemes often overlook the genuine needs of women. Prioritizing skill development remains central to achieving true empowerment. High taxation without tangible benefits can breed discontent among taxpayers. It is imperative to ensure proper infrastructure and growth prospects to justify these elevated tax burdens. India's resilience during global economic downturns underscores its growth potential. Attracting skilled labor and capital inflows is vital for sustaining economic momentum. The emphasis on capital investment is essential to maintain economic growth above 10%. Continued investment is crucial for securing long-term stability and progress. Effectively managing government debt can lead to improved bond ratings and enhanced market liquidity, both of which are critical for economic stability amid global uncertainties. Currently, India's foreign exchange reserves are more than adequate for its needs. As the economy continues to grow, an increase in these reserves is anticipated. Looking ahead, the government may seek higher dividends from the RBI, which could influence fiscal strategies. Such changes could necessitate adjustments in monetary policy and public spending. Increasing liquidity through government bonds is proposed as a viable solution for funding infrastructure and digital projects. This strategy could catalyze development and economic growth. Moreover, necessary tax reforms must accommodate the growing economy and rising living costs. Adjusting tax slabs can support low-income families while stimulating consumer spending. Despite this need for reform, expectations for tax action remain minimal, with suggested increases for higher tax brackets reflecting widespread skepticism towards government financial initiatives. IT companies are experiencing a resurgence following favorable quarterly earnings, presenting promising opportunities for long-term investments in the sector. Similarly, tire companies benefit from price increases, indicating their potential as outperforming investments. This shift highlights a renewed investment focus on tires and batteries.